A brand new trading week is upon us. Right behind me here at the New York Stock Exchange, and investors, they're continuing to wonder if the Nasdaq's recent slide will continue after experiencing its worst week since 2020. Yes, the Nasdaq down more than 7% since Monday, on track for its worst week since October 2020, and both the Dow and S&P 500 on track for a third straight week of losses. Major losses in growth names pushed the Nasdaq further into correction territory as rising rates pressured tech stocks, not only pushing the Nasdaq off to a bad start, but off to its worst start to a year through the first 14 trading days since back in 2008. This according to FactSet. And then there is Bitcoin. Bitcoin getting hit hard on Friday as investors brace for the Fed and brace for dumping riskier assets with higher rates ahead. The digital asset falling more than 10% to around $38,233 on Friday. But now we have a new trading week ahead right behind me here at the New York Stock Exchange. And there's quite a bit to look forward to, including the Federal Reserve's interest rate decision. So let's now take a look at what will likely move the markets in the week ahead. Now we kick off the week with a series of market manufacturing PMI reads out of the combination of France, Germany, the EU, the UK, as well as the United States. While keeping an eye on the United States, Chicago Fed National Activity Index that's due out, that currently sits at 0.37. Tuesday kicks off in Germany with that nation's IFO expectations data due out. Expectations is a read of 93. Meanwhile, here in the U.S., it's all about housing with November's housing price index due. Expectations call for a read of 1%, while we'll also see the release of the S&P Case-Shiller Home Prices Index with expectations calling for a read of 17.8%. Now Wednesday sees even more housing figures due out in the United States, which includes new home sales figures expected at 750,000 million, but it's also a session that's all about interest rates. First off, in Canada, the Bank of Canada's interest rate decision is due. That rate currently sits at 0.25%, while here in the U.S. Federal Reserve's interest rate decision is expected. Expectations call for a read of an unchanged figure of 0.25%. Now Thursday sees us stay right here in the United States with a series of key reports. First, we have December durable goods orders. Expectations call for a read of negative 0.5%. Then we also have preliminary fourth quarter GDP expected at a read of 5.6% annualized. And on top of that, we have weekly, initial and continuing jobless claims figures. And we also have December pending home sales numbers due out. Expectations call for a read of 0.4% month over month. Then Friday sees us kick off in the European Union with European January consumer sentiment due out. Expectations call for a read of 114.5. Meanwhile, right here in the United States, we have personal spending, personal income, as well as U.S. consumer sentiment, Michigan consumer sentiment, that is. Expectations call for a read of 68.6. And a quick reminder, keep an eye on more earnings that will be released throughout the week as the earnings season has kicked off right here in the United States. Also keep an eye on geopolitical headlines, which have been moving the markets as of late. And until next week, live from the New York Stock Exchange, I'm James Sweeney, reporting for ICM.